Hello everybody and welcome to our debate, which is all about how cities and regions can best use the investment plan for Europe. Now we know that sometimes negotiating what kind of fund, what kind of financing to use for what kind of project is difficult. And that's why we've gathered together 4 senior members of the European Investment Bank to help answer your questions. Let me introduce you to them. We have Jerry Muscat, who heads the division at the European Investment Bank that deals with urban development in the project department. That's the bit that has the engineers and the economists, the planners, that kind of thing. We also have Mark Mawhinney, who is the head of the European Investment Advisory Hub. That's that important element of the investment plan for Europe that is actually providing advice to you. We have Fotini Kodzuku, who is a senior advisor in the part of the bank that deals with operations. You're actually making the loans and very much involved in this FC, European Fund for Strategic Investments. And we also have Frank Lee, who heads the division that deals with financial instruments and advice around that. So thanks all of you for joining us today. Let's start with the big question. What is the investment plan for Europe and the related fund for strategic investments? Fotini, help us with that one.
Well, the investment plan for Europe is a strategy launched by the European Commission in November 2014 with the purpose to foster investments in the European Union. It comes as a response to the decline in competitiveness and investments in the Union due to the economic crisis of the last years. In essence, it is based on 3 pillars. You mentioned some of them before. So the first pillar is to mobilize finance for investments, and this is through the European Fund for Strategic Investments and the cooperation with national promotional banks. The second pillar concerns providing investment advice and comes with the European Advisory Hub and the European Investment for Project Portal. And the third pillar concerns creating a friendly investment environment by removing the barriers in EU or national level through legal and structural reforms. Coming now to the second part, which is the European Fund for Strategic Investments, this the implementation of this has been entrusted to the EIB group through the EU guarantee, which is 16 billion from the Commission, together with 5 billion contribution of capital by the EIB's own resources. It's a key priority for the bank, and its main goal is to catalyze investment and to increase access to finance for corporates.
Does this mean, though, that the mechanisms that cities and regions might have been using in the past for financing with the EIB are replaced by this new fund?
Not at all. EIB has been financing high-risk operations for a long time. What FC does is it comes to complement and maximize the capacity, the existing capacity of EIB. So it provides EIB with additional risk-bearing capacity to drastically increase the number of operations, number, amounts, and complexity as well where needed. And to do that, the bank has developed new products, has also revised its credit risk policy guidelines to provide more flexibility.
Let me turn to Mark Mawhinney. Mark, as we've heard, one of the important elements of the plan is the advisory hub. Now, what does it do?
In essence, it is a single point of contact or a single point of access to a range of advisory services that have existed in the past within the bank, but clearly need to be built up further in order to help the investment plan for Europe achieve what it wants to do, which is to have more bankable projects come through the system. The intention was to deal with a gap in advisory services, and as I said, we're building from the start on existing services that are already there. We have, for example, a range of financial advisory services, and Frank does some of that. We have technical advisory services, sometimes through the work that Jerry and his team do, but also through other elements such as Jaspers, which looks specifically at the at ESAF or cohesion funds.
But let me ask you, Jerry, now first of all, what kind of urban and regional investments can the European Fund for Strategic Investments actually support?
Well, if I take the mainstream lending that we do to cities, one of the main ways in which we finance cities is actually through multi-project facilities, multi-project framework loans that we do with the cities, where we co-finance a 3 or 4 year time slice of a city's long-term investment program. And this is something we've put in place with, I think we have about 70 cities that we've financed in this way over the last 10 years. And with FC, what FC actually enables us to do is work with cities that have weaker credit profiles or can't access long-term financing in the way that some of the other cities can. And this enables us to finance investments in these cities also of a scale that will really have an impact. Typically the direct financing with cities is for cities above about 75,000 people. But with working with promotional banks and municipal credit institutions, we can reach cities down to about 10,000 people or even below, and much smaller loans. And with those partner banks, what FC may allow us to do is actually to share risk with the banks, not only lend to the banks.
Is this more than a hypothetical situation? Is it already working? Have you tested it out? Are regions and cities actually benefiting from FC?
Yes, actually it's something that we've already started doing. Just to give a couple of examples, we've recently approved a loan to the city of Lisbon. And Lisbon actually, although a capital city of Europe, has had difficulty accessing long-term finance in the markets. And through use of the FC, we've been able to actually lend long-term to the city of Lisbon and enable it to really implement a very important investment program which will tackle things like flood risk and prevention of the risks of flooding with climate change, and also to eliminate some of the last slums in the city through social housing programs. So that's one example. Perhaps the second one, if I may, is through loans to municipal companies. FC actually enables us to lend to smaller municipal companies, and also we've just approved recently a loan to a housing company in the Polish city of Poznan. And this is a relatively small housing company that we probably wouldn't have been able to finance through a direct loan without a guarantee from the city, as Fotini was saying. And so using FC, this has enabled us to do this type of project, and we see more of these coming through the pipeline actually.
Is this one of the ways then that support under FC differs than support under other EIB financing? What is the difference? Fotini, you had already touched on that earlier. Can we explore that a little bit more?
Well, the way it differs is that we can take more risk based on the FC, the backing of the FC guarantee.
As well as extending risk, what the FC enables us to do with cities and regions is actually to develop new products. And one of the things that we're looking at actually is the investment into urban development funds, which can be co-financed with the private sector. And in the past, it's been quite difficult to actually have EIB directly invest in these kind of investment funds. But now I think with FC, we're increasingly seeing examples where we're being asked to invest directly in the funds. And those funds can finance investments in, for example, urban regeneration, bringing brownfield sites back into productive use, stimulating the economic regeneration of parts of the city that have been in decline.
What about the price, though? I mean, that's always an issue. Is it more expensive?
At the end of the day, we also need to remind that the EIB funding cost is cheaper due to its AAA rating, and that is reflected in the whole pricing of the operation. So we are always competitive to the market.
One has to understand that if a city is able to invest through a structure which has a higher risk, the city can actually achieve a project that it might not have been able to find financing for before. So it may make the difference between a project going ahead or not going ahead.
What about the bureaucracy? We've heard grumblings that it's a little heavy on the paperwork. Is that fair?
No, I wouldn't say that. All FC operations, they follow the same procedures that we have for the EIB operations, because we need to remember that an FC operation is an EIB operation. An FC operation has to meet the EIB's criteria for eligibility and bankability. The same approval process goes through, so we present it to the governing bodies of the EIB group. The only additional step is the approval of the use of the EU guarantee by the investment committee, which is a committee by 8 independent experts. But this does not bring any burden to the client, as it is done within the timeline of the EIB group approval.
Let's get on to the advice. What kind of advice can the EIB provide?
So my team focuses on providing advice around financial instruments. Now, what are financial instruments? Really, we are talking about an innovative way of using EU grant funding. So the European Structural and Investment Funds, which is a large sum of money, as you know, that gets distributed across the EU. What we do is to try and help these public authorities that are dealing with these grant programs to actually look at new ways of using their grants. And what we mean is trying to get more with less. And of course, that's a big buzzword right now in Europe. You know, public budgets are diminishing, and people are looking at how can we get better use out of public funds other than providing grants to projects. So what that means is that we focus on projects or final beneficiaries or people who receive the money who actually have a capacity to actually pay back that money. So typically you would see financial instruments developing in areas like supporting small and medium-sized enterprises, or supporting projects which have some sort of revenue generating potential or cost saving potential. And so we see a lot of activity also in energy efficiency, renewable energy. So these are the sorts of things that we encourage public authorities, including cities, and Jerry mentioned earlier the urban development funds. This is one of many type of financial instruments that we have. We encourage them to look at their projects and to think about, you know, other ways perhaps of financing these things, to get smarter use from their money, and also perhaps to finance things using these urban development funds instead of taking, for example, a loan on their balance sheet, which then obviously puts them more into debt. There are other ways in which they can finance things, whether it's public-private partnerships or whatever. So that's in a nutshell what we do.
Mark, dealing with the advisory hub, are you these days in the EIB only going to tell cities and regions that they should use FC to fund their projects, or will you push them over to Frank's department? How does it work?
The hub, or the advisory hub itself, will pull in people from the outside world. Quite a lot of that advice usually comes from the private sector. So we will make use of that in addition to the advisory services that we have internally within the bank. For example, within the bank, as we have it at the moment, we have, as Frank mentioned, Jaspers, which is a body of people, 150 people now within the bank, who provide advice related to cohesion fund grants. Now, what they do is they look at the feasibility studies, they look at the geotechnical, they look at the early financial work that needs to go into a project. Yeah.
So if I have a project, I'm a city or a region, and I'm not quite sure if it's going to fly, I'm not quite sure what kind of money I need, what are you going to be able to help me with? All of that?
Typically the work that we've done so far actually falls into two categories. We have the cities or the municipalities who have a good idea of what they want, who've developed a bit of a plan, and generally they're well known to the bank already. So what we find with these sorts of projects is that either they go straight into the bank to be looked at from an FC point of view or from traditional lending points of view. Or if they have an area where there's a gap or they're not quite clear, then we can look at helping them at that point in time. Other types of projects come in where it's very, very early stage. They have a bit of an idea, but not enough detail. And generally what we do there is what we call signposting, which is actually to either pass them on to other people who can help them fill that gap in.
Other people like Frank, maybe.
Like Frank, yeah. Or provide them with a little piece of advice to go home to do their homework.
Thank you. Now, many cities and regions are using EIB loans to co-finance the grants they receive under the European Structural and Investment Funds. Jerry, is that going to continue?
Yes, of course it's going to continue. It's actually a mainstream of the work that we do with cities. As I mentioned before, when we co-finance a city's investment program, we can finance something like half of the city's, the investment program of a city, and the other half has to be financed from other sources. And in many cases, particularly in countries that are benefiting from the structural funds, the co-financing is coming from the structural investment funds. So we do co-finance alongside them, and it's a mainstream of our work, both with cities and with regions, in fact, and that will continue.
What about, though, using the European Fund for Strategic Investments as a way to co-finance? Frank, can that work?
So indeed, that is, as Jerry was mentioning, that's sort of a new innovative area which is really just coming out, as it were. The Commission is certainly very enthusiastic about looking at ways of combining the different EU funding pots, and obviously that makes a lot of sense. Mm-hmm. At the same time, of course, that represents challenges because each pot comes with its own rules, its own eligibility constraints. So we're working on that, and I would say that this is very much a fluid, moving target right now. Everyone is moving in the right direction of trying to make it easier for these different pots of money to come together. I would say we have two types of basic advisory services. One is project preparation. So that is focusing on the projects themselves, and through the JASPERS program, for example, how do they get access to the grants, to the structural funds grants. Then you have more sort of access to finance type of advisory services, which my team sits in, and that's about how do we get access to instruments other than grants, which are going to be used in a more revolving way, perhaps a more smart way. And that's where we start to talk about urban development funds, financial instruments. And yes, we are trying to make sure that those two funding pots can come together. We have examples in Estonia, in Sweden, in France, in Slovakia. So already, in the more developed regions and also in the lesser developed regions.
And are we also talking about combining European FC money and structural funds in the same project?
Yes, potentially we can. I think we have to bear in mind that when the ESIF funding comes in, the national contribution to the ESIF funding can't come from the FC funding. So we have to be careful in the structuring of it. But clearly, there are certainly no barriers to actually co-financing FC and ESIF programs. And we are seeing projects coming forward with that in mind.
Is there any kind of special application process that cities and regions need to follow in order to benefit from the European Fund for Strategic Investments?
No, Sharon, there isn't. It's the usual EIB channels where the cities and regions can apply, meaning the EIB's website, or the local external offices. Now we have offices in almost all the EU capitals, or the European Advisory Hub, depending on the level of advisory needed.
Actually, one of the best ways we find that cities can approach EIB and learn a bit more about what we do is to actually talk to cities in their country that already work with us.
Indeed, this sort of peer-to-peer exchange. I mean, what we find is that people learn much better from others, their peers that have done the same thing, rather than people like us sitting here and sort of preaching the gospel, as it were. So again, for financial instruments, we have a platform called FiCompass, which is a website, primarily website driven, but it also has a series of events and workshops that we do across Europe. It's funded by the Commission, administered through us, and essentially, again, we are looking at examples, at case studies where some authorities who already have done this are explaining to other authorities who are interested in doing this how they did it, and through that process they can really learn from real life examples.
How do cities and regions actually apply for advice or get to you?
It's very simply. There is the website, which is open and available to all. As Flotini and Jerry have said, there are the existing networks and the local regional offices, all of which are now well aware of what the hub does.
Let me finish off all of you with a provocative question. I know that cities and regions are worried at the moment about the fact that with these financial instruments, FC, all these innovative financing mechanisms that seem to be flavour of the month, that does this spell the end of grants? Many cities and regions feel they need grants. Are they right to be worried?
We all expect grant financing to continue, but with the constraints that are evident in the public sector, whether it will continue to the same extent that it is now, it's anybody's guess. My advice to cities and regions is actually to experiment with alternatives, so that if grant funding is more constrained in the future, then they're in a good position to actually make use of other options as well.
We admit that there is always going to be a need for grants for certain kinds of projects. And I think none of us are sitting here saying the world will continue without grants, and we should prepare ourselves for that future. I think it might be worth also putting things into perspective. I mean, the European Structural Investment Fund package is about 400 billion euros. The amount of money that's been set aside for financial instruments in the last period, which was 2007 to 13, is about 20 billion. So that's about 5% of the funding. The expectations of the Commission in this period is that that might double. So we're talking about 10%. So we're not really talking about a huge amount of the pot. There are ways in which you can finance schools and hospitals, whether it's public-private partnerships or whether you're looking to get better use of existing facilities. And I would, again, that's a big buzzword around circular economy, about reusing existing resources. We're always trying to encourage people to make more efficient use of existing resources. So that means maybe improving the energy efficiency of the building or something like that. And that can be financed in a revolving way rather than perhaps by using grants.
The European Fund for Strategic Investments does not come as a substitute, but comes as a complement source of financing. And it doesn't want to push away the other actors of providing finance in the market, not at all. It's a market-driven instrument, and it complements the other sources of financing.
Well, we'll have to leave it there. Thanks all of you for answering all these questions. I, for one, feel much more informed. I hope you do too. But if you want to know more, you'll find all the information you need on the massive open online course website and on the EIB website as well. But for now, bye.